Hi guys, welcome back. In today's video of Q4FY25 results, we are going to be tracking three companies. One is Garware Hi-Tech Films, the second is Anup Engineering, and the third is Syrma SGS. Okay, so the first company, Garware Hi-Tech Films, again, by the way, before I start off with all the three companies, for each of the companies, there is a detailed video explaining the business model in depth in my YouTube channel. Just head over to my YouTube channel, Business Analysis Playlist, you'll find it over there. Since it's just going to be a result update, I'm just going to skim through the result as well as a PPT and the con call. Okay. So if you look at Garware Hi-Tech Films, you will see that over the last 2 years or even a couple of years, they had a really good product mix change. Like earlier, if you see, they were catering to very commoditized films. Okay. Now, if you look at them, they ventured into providing the sun protection film, the paint protection film. Sun protection film, as you know, in a simple word, if you have to tell, you might see in these cars or jeeps, you use this tinted film, right, in order to prevent the sun rays getting inside your car, right? That is called a sun protection film. If you want to talk about paint protection film, you might see there are times when you buy a car, you might want to change the color of the car, right? And you'll put this film around it to change the color. It's not necessarily in order to change the color, but as you know, when you talk about a car, right, it's very, like, let's say you do not want your car to have scratches or some sort of dent, right? And putting this film, it could be like, imagine if your car is red in color, you can also put a red color kind of film, so in order to prevent it from any kind of dent or scratches and tears or anything. So over the years, what they've happened, they've gone from catering just a commoditized film to going into a value added products where they're catering more towards this sun protection film, paint protection film, and so forth and so on. Now when you look at this year, the target for them was to grow, or to grow at 25%, and the management had told that in this year they're going to be targeting a top line of 2000 crore. Okay. And if you look at the last 3 quarters, the performance has been great, and there was no any kind of how do I put this, I mean, it was easy and achievable. You knew that Q4 mein ye 2000 crore kar lega, and that is exactly how it has been. Sales is up 26%, pat agar aap dekhte ho, pat is up 62%, EBITDA margins agar aap dekhte ho, EBITDA margin is also at 23.5% versus last time it was 19.1. Why did this margin improve? Why did the operating leverage come through? Because one, economies of scale, and the second, their shift from being a just normal commoditized film बेचने से go to a value added product film. ठीक है. In fact, if you look there, I would say they have done way above the guidance that was given to them, because बोला था 2000 करोड़, and now they have done around 2110 crores. ठीक है. So overall, great, well and done. But what is important is over here two things. Will this pace of growth continue for the upcoming years? That is the most important question to ask the management. And the second thing is, as you know, for Garware, the majority of the revenue comes from export. ठीक है. In fact, if you look, 40% of the revenue comes from Northern America. And right, Trump ka, all this tariff ka wars that is happening, especially I think, that day when Trump had announced his tariffs, across the globe, you will see, I think Garware, I think, lost almost, I believe, 30 to 40% of the value. Like, the stock was down. Why? Because they have a huge exposure, to Northern America, and a little bit, in case, let's say the retaliatory tariff, were huge or something, it would definitely impact them. Okay. So first, coming to the first factor in terms of guidance. Okay. Company bold right, like, they're sticking up to their old guidance. In the previous con calls, they had mentioned like in FY25, they're going to, 24-25 mein they wanted to do 2000 crore, and 25-26 mein they wanted to do 2600 crores, and they're sticking up to that, which is a good 20 to 25% kind of growth that you can expect. Okay. Not only that, they have two capex coming up. Okay. One capex is coming up in this October 2026, as you October 20 FY26, as we talk about it. It should come up, and this year putting up, I think this is going to be for the paint protection film. Okay. ये वो कर रहा है, and the other capex is going to go live in 27, okay, FY27. Now, because of both of these capex, since again both of these capex are done to cater to your value added products, right, what is going to happen is, again, यहाँ से भी और भी margin बढ़ने का, there is a higher probability. In fact, they are also inching up towards, they've mentioned in the con call, like, margins will only go up considering that these two capex also will come up. Okay. So guidance is great, 20 to 25% ka CAGR. If you take considering the 1 year forward P, considering ke, like, jo margins है, very conservatively, if I take that the margins is not going to improve, it's going to stay where it is, you will see 1 year forward P lies in that 20 to 25 only. So not a bad deal, but also at the same time, it's there is no problem in the business. Now I think the only factor over here was the tariff wars. Like, how do you see this tariff thing? And management ka bola hai ki, like, two things. One, the tariffs that we are facing, that is India is facing, compared to the rest of the country, is quite lower. So it wouldn't affect us as much. And I think this is a very common narrative you'll see across any manufacturing companies, or any companies that has huge exposure to US. उनका यही कहना है कि, लाइक, अगर इंडिया का टैरिफ 30% है, अगर आप साउथ कोरिया का देखो या चाइना का देखो, इट इज 40-60, इट्स वे हायर देन इंडिया, राइट? So it's not like tariff has been imposed only in India, but the good silver lining over here is that the tariff is relatively lower towards India than compared to the rest of the world. So yeah, that is one thing. The second thing over here, other than this tariff, also what they're also doing right now is they're trying to increase their geographical presence. In fact, I believe in this year they've entered newer geographies such as Japan, South Korea, Philippines, in these areas. Other than that, what they're also trying to do is, like, try to slowly reduce their exposure as much as they can towards Northern America and cater towards Europe and Middle East. So in case tomorrow, let's say, God forbid, something that happens, there is, it wouldn't affect their revenue as much as it would do today. Okay. Other than that, the other update, like, if you look at Garware right now, they were a pure B2B company. Okay, like only B2B. Okay. Now what they're doing is they're venturing into B2C also. Okay. Now when you look at this paint protection film and this category especially, you see, since it is a value added product, first of all, it is expensive, so obviously your margins are high. Now think about it, right? If I'm selling a paint protection film, first I'll sell it to a dealer, that dealer will go and sell it to a retailer, the retailer will sell it to a consumer. ठीक है, इसके वजह से क्या होता है, कंज्यूमर को तो ऑब्वियसली द कॉस्ट विल बी वे हायर कंपेयर टू डीलर, राइट? नाउ दे आर ट्राइंग टू गो इनटू दिस डायरेक्ट B2C where they have their e-commerce platform and they will sell this paint protection film. यहाँ से क्या होगा, the consumer will get a very high quality product, but relatively at a lower price because that middleman is not there. And for these people also, margin will be maintained. Okay. Similarly, like how you order things from Flipkart and you get it, the same kind of model they're going for with this paint protection film, and they believe it is going to do well for them because, again, this is a very nascent stage. I think it's hardly been 3 months since they launched this part of the business. Very, very nascent stage, very early. The reason also, I think, again, this is primarily in the Northern America right now. It's going to be, not going to be hard to venture is also because if you look at the cultural difference, like if you look at India, we don't go to renovator houses and all. Like hum log Home Depot mein jaake, IKEA mein jaake, we don't get things, right? We like to get ready-made things, or the worst case scenario, we will hire a carpenter, we'll hire somebody from Urban Clap to do. But you will see that it's a completely stark, different, or a different kind of culture in the US. People go to that Home Depot, your $1.99, or $1.13, whatever those stores are, they will go get there, they will get the products, and they renovate their home. So I think that is why they strongly believe that the B2C market for them would work as well as the B2B market is working. Okay. So that's that about Garware. Very good set of numbers, especially considering the kind of the kind of noise that has been there with all this US ka drama and everything. Very great execution for this year, and the guidance also remains strong for the upcoming year also. Okay. Very good pace of growth is maintained, everything is hunky dory, everything is great. Okay. Now the next company that we'll be doing is Anup Engineering. As usual, Anup Engineering ka bhi agar aap dekhte ho, the guidance for sales was they have always guided for 25 to 30% in terms of sales growth, and the margins roughly to be around 20 to 23%, in that range, the EBITDA margins. Okay. If you look at the sales has been up by 30%. Agar aap PAT ko dekhte ho, PAT is up by 13% on a year on year. Now here is the thing, when you're looking at the bottom line, there are two things to consider. Okay. The first thing is, आप देख सकते हो उनका एक merger हुआ है. They have acquired a company called as Maple Engineering. ठीक है, acquisition, merger ने acquisition बोल सकते हो आप. So you have to consider this when you're looking at the bottom line. And the other thing is, they've had a tax reversal that has happened throughout every quarter in this year. So make sure you're considering this while you're considering PAT ka numbers. Don't take it in an absolute level. ठीक है. Now over here also same thing, sales has been great and everything. Over here उनका जो भी capex था वो भी complete हो चुका है. Mabel उनका जो acquisition था तमिलनाडु में, what they have done is going well for them. It's also going great. There seems to be no problem with the business. But here is the thing, इनका अगर आप देखते हो export business जो है, export business is 54%. ठीक है, as of FY25 export is contributing 54%. In this export also they're catering more towards this power, this hydrogen, blue hydrogen, these kind of industries. ठीक है. Over here also the same problem, the management is telling, we are a bit cautious right now in terms of order book. Wahi, how do I put this, in terms of the tariff and everything that is there, there has been a little bit of uncertainty. In fact, agar aap dekhte ho, unka order book jo hai for this year, for the upcoming year FY26, the order book is at somewhere around 740 crore. Usually if you see, the order book used to be around 800 odd crores in that range. Okay, it goes back to, the same point ki, like, because there is this tariff ka, this ambiguity on one end, you do not also know, they have been seeing a little bit of delay in terms of booking the order. Okay, inquiries hai, but for them to get finalized into order, there has been a delay. So this is one chota sa red flag. And I always believe, when company use the word cautious in their con call, you as a shareholder have to be cautious. So this is one thing. Okay, although in spite of this, they're still guiding again for that 25 to 25% kind of growth. Usually they used to tell 25 to 30. Abhi they're sticking strongly to a 25% kind of number. And बोल रहे वही EBITDA margin will be in the range of 21 to 23. यहाँ पे आप एक चीज देख सकते हो, one, the working capital days या आपका debtors days या receivable days आप जो भी बोलो, that has been increased. The reason for this is, they have done the work, they have done the product, but since the client ka side, see, these people do this huge engineering products, right? Like heat exchangers and everything. Since the client ka site is not ready, they couldn't transport this product. It's not that the client has delayed or anything, or they have cancelled upon the order. Since the client ka site is not ready, they can't transport from their warehouse, from their plant to the client ka site. Now obviously jab tak aap client ka site mein na jaoge, tab tak kya hoga, aapka the equipment is right there, aapka payment aane isme delay hoga thoda. So this has been happening in this quarter. That is why you will see thoda to aapka receivables day high hai. The other thing over here also, you will see that one thing, I think a very common question over with Anup Engineering is, although they're moving to a higher equipment, where it is a bit the higher order of the hierarchy, you will see that the margin profile is not improving. Margin profile is still in that 21 to 23%, in that range, right? It keeps fluctuating between that plus or minus 2. The reason is because whenever you're going for a higher एक higher vessel जो आप बोल सकते हो, the amount of material that is required is more. Second thing is the quality of material that you use is also higher, right? Like earlier you were probably using normal carbon का material, now you have to go for a higher thing like something like a titanium. So इसके वजह से क्या होगा, आपका cogs that is there is increasing because of this. So that is also one of the reason कि like आप देख सकते हो income statement में हो, आपका cogs is also higher, and that is why you'll see in spite of rise in cogs, you'll see that margin is not improving. It is just a part and parcel of the game. ठीक है, overall again good. All the capex for them has been done, right? Unka jo capex hai, it has been done at Kheda plant, and now they have 3 sites. One is Ahmedabad, one is Kheda, and Mabel ka jo ek plant hai in Tamil Nadu. Now with everything at full capacity, it should be, they should be able to clock a revenue of around 1200 crore. But I believe in the upcoming year, the capacity would be somewhere between 60 to 75%, that kind of utilization, and that is why they have guided for like a 25% in terms of revenue. So that is roughly around, from this from this year, it's roughly around 900 or 960 crores in revenue you can expect. Okay, overall good, but वही ना थोड़ा सो यहाँ पे ये टैक्स रिवर्सल, ये एक्विजिशन, इसके वजह से although the growth is maintained, the operating leverage has been missing. And right, यहाँ पे any stock that you take, you need two things. One, we need the pace of growth to be maintained, or you would like a company जिसका pace of growth बढ़ रहा है. ठीक है, earlier if they're growing at 20, now if they're growing at 25, well and good, well and great. Now this will allow you to get that P rating. On the other hand, we need the EPS ka expansion also, and I think this is like around the third quarter where we've seen that the EPS ka growth has not been that great, with all the things that has been happening in terms of acquisition, in terms of this tax reversal ka issues and everything. ठीक है, so that is the only thing. EPS का growth आ नहीं रहा है, although the growth is very intact. ठीक है, business is moving in the right direction, but EPS का growth तो नहीं मिल रहा है, so that is a little bit of So the last business that we'll be doing is Syrma SGS. Unlike the last two companies that we did, this is a electronics company. ठीक है, they over here also another thing you will see a very common narrative over here is the growth has been fantastic throughout the quarters. All the 4 quarters in this year, the growth has been there. But the problem यहाँ पे क्या आता है in terms of Syrma, the huge problem was the margins were impacted. ठीक है, because if you look at them historically, especially a couple of years back, if you've seen, I think their highest margin has also been in one quarter around 11 to 12%, okay? And their margins dropped, I believe, even to 7% at one point, okay? Why? Because the industry that they're catering to, or the vertical, they cater to many verticals, right? Like automotive industry ko cater karta hai, consumer industry ko, medical industry ko, all of these industries they cater where they give their products out, okay? Now what had happened in this year, especially, although the growth rate was there, the margins were impacted because they started catering more towards the consumer industry, ठीक है? Consumer industry में क्या होता है? Your volumes are high, so you're doing more number of products, but आपका margins are razor thin, ठीक है? It is a pure volume game, just like how we play in the jewelry industry. B2C is both volume plus value, but B2B is pure volume game. वहाँ पे margin का question ही नहीं आता. You work on a very razor thin margin. So similarly over here with consumer industry क्या हुआ? Since they were catering to that, a huge part of their revenue started coming from consumer. Margins were really impacted over here, ठीक है? And in this year they had guided for that, they had guided कि like ठीक है, we will grow at least at 20 to 25, and we will be having a EBITDA margins of 7%, ठीक है? Similarly, growth rate has been good. Growth rate is 20%. PAT also grew by 48%. And if you look at the EBITDA margin has inched up to 8.6 percentage, in that range. Okay, whatever they've guided for, they have done more only. और ये बोल रहा है कि like आगे जाके, that is in FY26 का year में, they have one capex in Pune that is going to go live in some time. Not only that, in FY26 they're guiding for around 30 to 35% kind of growth. Okay, so that kind of growth, and they're still guiding. They're being a very conservative in terms of EBITDA margin, because see, this time if you look in this year FY24-25, the consumer sector का revenue contribution was 35%. ठीक है, आप बोल रहे हो 35% में आपका जो revenue contribution था consumer division में, in that only you did 8.6 का EBITDA margin. आप बोल रहे हो FY26 में consumer division का जो revenue आ रहा है ना from that division, they're telling कि like next year in FY26, that is the upcoming year, consumer division will contribute 30% to the overall top line. Going forward in the upcoming year, that is the year after that, in FY27, it would contribute 25%, like this. Okay, so if it is going to contribute only 30% in this year, why are you still guiding for just 8% ka EBITDA margin? I know you're being conservative, but I think this is one thing that probably the analyst or didn't like, कि like आप इतना conservative क्यों हो रहे हो, कि like why can't we, when I think everybody wants Syrma, to go to that historical margins of, of 11-12% in that range, ठीक है? But overall still better. जो भी था 7% था, 8.6 है. Now they're guiding for it. Probably they will do 9 या 9.5 in the upcoming year. We don't know. We'll have to track. Very good thing over here, they've understood, this consumer business is a low hanging fruit. उससे कुछ होने वाला नहीं है, ठीक है? Top line आ रहा है, but bottom line is getting eaten up. So now they're slowly reducing that consumer का division, ठीक है? Order book remains strong. Everything is great. वही, and they're concentrating more on the other sectors in order to grow both volume as well as margin, ठीक है? Now if you look at them, if you see that if you see like let's say conservatively उन्होंने बोला 30 to 35, if you take 30% kind of growth, then you can expect next year the top line to be around 4,900 crore. And अगर मैं सोचती हूँ कि like इसका जो इस साल में था was 4.9% PAT margin, and if they continue to be in that PAT margin somewhere around 5%, then आप देख सकते हो कि like आपका next year का PAT would be around 245 crore. So 1 year forward P would be in the range of somewhere between 35 to 40, ठीक है? The question to ask over here is, would you be happy paying 35 to 40 times earnings for a 19, for a 20% kind of growth engine? That is a question. Irrespective of whether the margin is improving, whether they're going to get the consumer division down, is this growth rate sufficient enough at the kind of earnings it is there? Is it okay for you? Is it a lucrative investment? I think that is a question you need to answer over here. That is very, very important. Although yes, situations are improving for Syrma, it is at least better than what it was last year. Okay, so that's it about the three companies. Okay, one extremely great, which is Garware Hi-Tech Films. Great set of numbers, great set of guidance, great management commentary. The other two also are sustaining, wherever they are or whatever they're doing, they're continuing to sustain. But one has no EPS ka growth, and the other one is a bit 20% growth at 40p is 35 to 40p is a question mark. Like is it worth it? That is the kind of question you need to answer. Okay, so that's that for today's video. I'll probably do another video regarding the writing instrument space. We'll see. I don't know. Let's see what happens. Yeah, and the last thing over here is the investment checklist workshop. As you see, right? It becomes easy peasy for you to track the entire result season, to see what to see, what not to see in a result, what to see in an income statement, how to understand the business, how to know what to look for, when you look at the income statement. All of this is covered in the investment checklist workshop. I'm going to put the link down below, both in the description as well as in the pinned comment section. Have a look at it, and I can vouch that you will not regret buying that. Okay, that's that for today's video. See you again tomorrow. Bye.